I'm informed that the figures are as follows. For Wisconsin's top personal income tax bracket puts you at 7.75% versus 3% in the state of Illinois, which would of course create a disincentive for highly paid professionals to live in our great state of Wisconsin, and particularly to live here in Kenosha County. Relative to Illinois, Wisconsin has that higher personal income tax rate, and although there are strong rumors of Illinois raising its rates, there still seems to be a compelling gap for professionals and forcing them to want to live in Illinois from a tax minimization perspective. Do you have any perspective on how to overcome this rate differential so as not to impede development in Wisconsin?
Yes, I do, and the answer is simple. We've got to cut the individual income tax rate, but not just on the top bracket, across the board. We've got to cut taxes on employers and individuals, and in the case of the individual income tax, one of the great fallacies that many of the people who've never signed the front of a paycheck in Madison don't understand is that when you raise the individual income tax rate, you raise it not only on people, you raise it on employers. The majority of small businesses in the state pay individual income taxes, not corporate income taxes. As governor, I will see that we reduce the individual income tax bracket, not just on the top bracket, but across the board, because I think income taxes in the state are too high. I take that a step further, and it's why I've talked about, and you might say, what does this have to do with jobs and the economy? And I think it fundamentally does have everything to do with jobs and the economy. I'd phase out the state tax on retirement income in Wisconsin as well. A lot of times we talk about that, think about people who've gone to Arizona or to Florida. But look at Texas, look at Tennessee, heck, look at Illinois, as you alluded to. Illinois has a better tax environment when it comes to retirement income. We've got to change that, not just because we want our retirees to stay, at least the residency to stay in the state of Wisconsin. Certainly we want the people here. But just as important, I want their money here. The simple fact is that we see people leave, the week after Christmas and come back about the week before Easter because of the climate up here, the weather climate. But I don't want them to stay 6 or 7 or 8 or 9 months somewhere else because of the tax climate in the state of Wisconsin. That's money that belongs in our institutions, our financial institutions that can be loaned to Wisconsin startups, to Wisconsin small businesses, to employers in the state that would like to add and expand more jobs in this state. We've got to cut the tax burden in the states that work. We don't need a study or a review. The simple fact is we already have the facts. Art Laffer, Professor Laffer, who advised President Reagan back 25, 30 years ago, has already come in and worked with me on this. You look at states, Texas compared to California. Texas a year ago, low tax burden, cut through the red tape, pro-job, pro-business governor. Texas created more jobs in one state than all 49 states combined. Similar size state, California, they can't leave fast enough. Compare Tennessee to Kentucky. Compare New Hampshire to Maine. States that lower the tax burden, lower the cost of doing business, make it easier to do business, are the states that see more jobs, and ultimately are the states that see a better state budget. Because as more people create more jobs and more opportunity, more people pay taxes, albeit at a lower rate, and that helps you fuel your state's economy and ultimately your state budget as well. It's just common sense. In retail, sometimes you keep the price here, but other times if you want to sell more products and make a greater profit, you reduce the price, you make less per piece, but you make more overall because you sell more in volume. That's got to happen in government as well.
Well, let me say that in general, I agree with that what was just said. We do need to do it. Let me talk specifically about how we're going to bring taxes down in the state of Wisconsin, because we need a plan to do this. When we were in Washington, we had a plan. It dealt with controlling spending, getting the budget balanced, and then cutting taxes. Let me be very specific in the state of Wisconsin. Our state is spending about $31 billion, give or take, this year. They're taking in about 29, and you all are probably hearing about a $2 billion plus shortfall in the state budget. It's been filled with stimulus and budget gimmicks to get them through to make it look balanced. That problem needs to be corrected and soon. Let me explain specifically what we're going to do to solve that problem. First thing, on the spending side, and you have to start on the spending side, we will cap the growth rate of spending, the bottom line number, that is the total dollars being spent in the state of Wisconsin. We will allow that number to increase at not more than 1% less than the rate of inflation. Be very clear on that. That is a 1% reduction in the size and scope of government annually for every year that I serve in office. Cap the growth rate of spending 1% below the rate of inflation. For argument's sake, let's assume inflation is 3%. We would cap the growth rate of spending at 2%. a real reduction in the size of government by $1 for every $100 of spending, we can do better. Okay, we might do better, but I'll promise the 1%. The other side of the coin is the revenue side, as every business owner would tell you. On the revenue side, revenues increase to the state budget for two reasons. One is because of inflation, and that's not hard to understand. If you employees get a raise, they pay more taxes, and that's inflation. The other reason it increases, though, is real growth in the economy. Real growth in the economy is like when a new business locates here in Kenosha, they have employees, and those employees pay into the revenue. So we have revenue side growing for two reasons, inflation plus real growth in the economy. If we get to a point where we have 2% real growth in the economy, and again, I think we can do better, but realistically, put a 2% real growth number in there. That puts our revenues growing at a 5% rate. So again, back through this, I apologize for being the math teacher up here, but the bottom line is if we control the growth rate of spending at 2%, while revenues are growing at 5%, we will in fact reach a true balance in the state budget inside of about 12 months and put us into surplus shortly thereafter. Folks, this is exactly what we did in Washington, D.C. We can do it here in Wisconsin. Now, here's the problem. When you get into surplus, typically what happens is you have all kinds of people demanding that you spend more money. We're going to have to be strong enough that when we hit that surplus, we keep that spending cap in place, because if we do, we will be in a position to literally cut taxes 3% across the board in the state of Wisconsin for every year following that I serve in office, and we will get that job done. Folks, one of the main things as I talk about that vision, Wisconsin be the best place in the world to do business, the best state in the country to do business, one of the key components of this is taxes. But I conclude the talk on taxes by saying it's not the only thing. There is more to business in the state of Wisconsin. We have more problems in this state than just taxes, and taxes alone will not solve our problem. We need to get our government out of the way so our businesses want to stay in the state of Wisconsin and want to grow and expand here. Thank you.